So I'm going to tell you a bit today about Horizon Discovery Group. Hopefully it's something a bit different from the types of companies you're seeing around here today. And I'm going to try and convince you why this would be a good investment to add to your portfolio. So Horizon is an international life science group, so approaching 250 employees, headquartered here in Cambridge in the UK, with significant sites in Boston, Massachusetts, St. Louis, Philadelphia, and Vienna. So we're not a biotech company. We don't develop drugs for patients. We are a picks and shovels company. We sell products and services that enable the pharmaceutical industry to develop drugs that are targeted to the genetic drivers of disease. So you'll be familiar in diseases like cancer, chemotherapies, radiotherapies. Those are really non-specific drugs that are designed to treat everyone. And the problem with them is they kill you only slightly less quick than they kill the cancer, so they're not very targeted. So with the advent of the Human Genome Project, which you may have been familiar when Bill Clinton stood on the steps of number 10 with Tony Blair to announce that the 3 billion lines of the human genome had been sequenced after 10 years and $2.6 billion of investment. What we're now able to do is do that type of experiment for $500, the whole genome for $500. The first one took $2.6 billion. And so what you're now able to do is identify the genetic drivers behind diseases like cancer, early onset Alzheimer's, cystic fibrosis. And once you've identified those genetic drivers, you can develop drugs that are targeted just to those genetic drivers. And the key to this is you can develop them in 7 years, not 15 years. You can develop them for hundreds of millions of dollars, not billions of dollars. And then you can give them to patients, and they work spectacularly well for patients. So it's better for the patients, better for the drug developers, better for the taxpayer who is not paying for all of that wasted failure. So we supply these picks and shovels to pharmaceutical companies around the world in 50 countries, and they supply it at every stage from human healthcare, from doing the DNA sequencing right the way through the drug development, drug manufacture, and the diagnostic test to ensure which patient gets the right drug. So the company's had a spectacular progress today. I was part of the founding team. In March 2008, we had 9,000 quid in the bank. We're worth about $250 million right now. We've consistently grown in excess of 100% in revenue. We're a revenue-generating company from day one. Unlike a biotech company, for the first 3 years, we traded organically and profitably. And then when the opportunity in the market came, we then plowed in investment from big pharmaceutical companies like Genentech and also Roche. And angel investment really took the company through to IPO in 6 years to the day from where we started. So we went to AIM last year, and we raised 69 million pounds. Initial target was 25, very oversubscribed. And since then, we've been deploying that cash. We've made 3 acquisitions, 2 US companies, 1 company in Austria to build the Horizon Discovery Group. The share price is currently trading around £2 a share. That equates to about 162 million sterling market cap. And the target analyst price, we're covered by 3 banks. Currently, the consensus price is 274. The 12-month consensus price, so there's about 35% upside from where we're trading right now. This isn't a team, it's the first time. The executives and non-executives here have started, grown, and exited businesses in excess of 20 billion in sterling. People like Jonathan Milner, you may have invested in a company called Abcam. It's one of the best performing companies on AIM, $1 billion sterling. He's put 7 million pounds of his own money into Horizon from the beginning. Ian Gillan was chairman of Axis Shield previously, chairman of a number of AIM and LSE companies. Susan Galbraith is the global head of oncology at AstraZeneca worldwide on our board, and Susan Searle is the chairman of Neil Woodford's Patient Capital Trust, as well as on the board of Kinetic Benchmark Holdings. Our key executives on the board, David Smoller was previously the president of Sigma Aldrich, a US biotech, got sold recently for $17 billion to Merck KGaA. Richard Vellacott was formerly VP Finance at Cambridge Silicon Radio, which recently got sold for $2.5 billion. And I've been setting up companies for the last 13 years. I've put a lot of cash myself into this business, current UK Entrepreneur of the Year, and the ambition for this company is to build this to 2, 3, 4 billion in market cap. So coming back to what we do, your genetic code is unique. It defines who you are. Minute genetic variations, 1 change in 3 billion, can determine whether you or your children will get cystic fibrosis. It can determine whether you have cancer and what your prognosis is once you've got it. And increasingly, those minute genetic variations will determine will you even respond to a drug if a pharmaceutical company has developed it. And what people need to be able to do to understand this, historically they've used worms, zebrafish, all kinds of species that are nothing like humans because that was what's available, because they were 99.8% genetically similar to humans. Now if you think of one base in 3 billion, that's 99.999999999, and that's why you're not a worm and that's why you're not a zebrafish. So what Horizon technology enables you to do is to take a human cell and like a surgeon's scalpel go into those 3 billion lines of code and edit just one single change in there. It's called genome editing. So what you result in is 2 human cell lines, and the only difference between them is the one genetic change that you think relates to that disease outcome. So the 2 drivers behind our business is these 500 million genomes that will be sequenced in the next 5 years. In the first 15 years, 1 million were sequenced. 500 million will be sequenced in the next 5 years. If you go to China, they're sequencing 100 million genomes. They've got 3,000 scientists going 8-hour shifts. They're trying to understand the genetic health of the nation. Where is cancer going to manifest itself and in what way? What diseases in the future generations will be causing us problems? So how do we manage our healthcare resources? So all of these genetic sequencing experiments throw up questions, billions of questions, and our technology enables them to get the answers to those questions. So the basic picks and shovels to be able to do that experiment. Now, because you now have effectively 2 patients in a test tube, we can now deploy those in drug discovery and development. And so the new mode of drug discovery and development is not the 15 years, multi-billion-dollar development time trying to give the drug to everyone, because that requires you to charge a high cost for each drug, and you only have 7 years of patent protection, so you've got to make all your revenues while you can and give it to every patient, whether it works for them or not. Now the model is much different, enabled by our technology. You identify the genetic drivers. I'll use a drug called crizotinib, Pfizer's drug for lung cancer. 5% of patients with a genetic feature, they target the drug just to that 5%. They develop the drug in 7 years, hundreds of millions of dollars, and they have 15 years of patent protection, and they make $250 million of revenue per year. So do the maths, a much bigger return on investment, a much lower risk profile for developing the drug. And our products and services enable the pharma companies to do that. I'm going to skip that one, far too complicated. So here are our products and services. So on the product side, we have 16,500 products. They are effectively like an inventory, a catalog, where people buy them from the vending machine, or they buy them from salespeople, and these products enable the pharmaceutical companies, the diagnostic companies, the academics to do this kind of personalized medicine research. Or we do this for the researchers themselves. We do the work for them in drug discovery and development. We are experts in cancer research and translational medicine. And this is very high price, high margin. So just one of these models gets sold to pharmaceutical companies for $5,000 to $20,000, and they pay every year. They never get to own it. If they pay us to do it, $50,000 to $150,000 each, and it belongs to us, not them, and we get to sell it to all of the other competitors. A breakthrough this year for academics, we've now able to make these not for $5,000 to $15,000 like we used to. We can now make them for $500, and we can make thousands a year, whereas we used to be able to make 100 a year only a year ago. So we can now stock that vending machine, and like with the antibody companies like Abcam, you can sell those reagents $990 a time, and the cost to us is only $50 plus the cost of sale. So as we drive volume, margins and profitability will improve. I don't know if you know who made the most money out of the gold rush. It wasn't the gold speculators. Who's the only company left? Levi Strauss. Because they sold the picks and shovels that enabled people to find the gold. These picks and shovels are so good that without any cost, we're able to extract milestones and drug royalties from our customers. So we've built over $250 million in potential milestones and royalties moving forward. These are visible contracted milestones. Analysts can forecast them. The cost base is all on the customer, not on us. So if they happen, it's 100% margin straight to the bottom line. So we get a bit of that drug discovery upside, but we don't invest in that activity. So we've just put out our full-year results for FY14, so our first year as a public company. Product and service revenue doubled, 99% growth. Our gross margin, which reflects the products, services, and the leveraged activities, expanded to 55%. As the products volume grows over the next years, we'll be driving that up into the 60s towards the 70s, expanding those milestone opportunities. We are loss-making this year, trending to profitability next year, and then sustainably profitable the year after, closing cash of 18 million quid. And that key change is the amount of products we can now produce. It's game-changing. These numbers were based on 2,700 products. 5 months later, we have 16,500 products. So the scale and cost basis of the business has fundamentally changed in this new year. Customer numbers around 1,000, up threefold within the year, 13 to 14, and we're now, how do we target this vending machine to those 100,000 academic customers that we haven't had historical access to? We now have the products to sell into those customers. So this is the consensus of 3 analysts, the growth forecast moving forward, 20 million sterling this year, 27, 35 over the next couple of years, and clearly we're looking to continue to outperform that, and with a blend of organic growth and additional mergers and acquisitions to far outperform that. So this is our strategy. We're well positioned in this market. DNA sequencing was $10 million still when we started in 2008. It's now a few $100s and trending down to an absolute commodity. So the demand for the answers to these experiments is great. So the opportunity is to drive a truck into this market right now. It's 29 billion in total. If you calculate from the bottom up, our specific piece of that market is 800 million sterling. So at 20 million revenue this year, that's about 2.5%. We want to try and get to 10, 15% market share in that area. So what are we going to be doing? We're going to be driving that core business. We've now got the engine to create these products, and they're only now $50 a copy. So if you can sell them for 1,000 to academics, 5, 20,000 for pharma, that's all profit if we can get that volume going in that business. Linking the value of what we do. So we work with 30 of the biggest 50 pharma companies plus 150 of the next level down. How do we link the value and do more, longer projects, more millions, rather than the million type projects we have right now? By being scientific leaders in personalized medicine, we have 10 big academic grants with institutions around the world. So we're actually doing pioneering, leading research in cancer research that enables us to attract a greater premium for what we do because of the support we can offer, and continue to accelerate by M&A. We did 3 acquisitions in year, 2 in the United States, 1 in Vienna. So we had a lot of recommendations to buy. So if you follow magazines like Shares, The Times, Investors Chronicle, etc., when we were down at sort of 140, 150, 160, a lot of people bought in. We went up to around 237, and there's just been a little drop-off over the last period for no discernible reason, given we put out fabulous results. So there's about 35% upside in the share price right now. So look in about 3 months' time, and if you didn't buy a share, see where it is and see what you could have made. And that's all I've got to say. Thank you.